David Bahnsen joining me here in New York City this morning. Look, I think this is all about uncertainty. You agree?
I do. I think last week, throughout the week, there was a lot of uncertainty. And now I'm starting to think it's not just uncertainty, but actual pricing in of bad news. The Secretary Lutnick in particular seems to be messaging not just negotiation, not just we're getting to a deal, but no, we're here for a little malaise, that we accept some pain. I think that's problematic for markets. And yeah, if we get more certainty that they're going to reverse course, that would be good for markets, but sure. Not on the table right now.
Do you think that tariffs could lead to a recession, flat out?
Well, they certainly could. But it isn't just the tariffs. It's the tariffs surrounded by retaliatory tariffs, surrounded by companies pulling back on their activity. That's the issue we're already seeing. Some companies don't know what to do. That compresses economic activity, Stuart.
The economy is definitely slowing.
Yes.
We have this tariff, you can call it a trade war, call it whatever you like. Inflation is not beaten. This is just not a good environment for stocks at this moment.
It is not. And what's even worse is that valuations were so high in stocks going in, so they're more vulnerable. That's why technology has gotten beaten so much more. The NASDAQ has losses that are double that of the Dow.
What about the uncertainty over the tax cut extension?
Yeah.
That's playing in the market, too.
I think that's what the administration was hoping, is that there'd be bad news in markets with tariffs, but good news with tax reform. But the tax reform is anything but certain as well.
It's kind of bogged down at the moment, isn't it?
It is. I still am optimistic on that, but it's not a sure thing.
Stay there, please. You're with me for the hour.
Yes.
Thank you, David. David Bahnsen with me now. I know exactly what this guy thinks about crypto. So let me ask you this question. You don't support strategic crypto reserve at all, ever, do you?
Of course not, but it isn't because I'm not a Bitcoin enthusiast. The arguments, and by the way, I support the congressman and support him in his governor race. He's a fine elected conservative. But those arguments, Stuart, just because something has limited access, that there's a fixed number, doesn't give it value. You know, there's not that many Hunter Biden paintings in the world. Does that make them more valuable? It has to be rare and useful. The Bitcoin issue, when he says it's a store of value, you asked him a couple times about volatility. It's come down 70% 3 times in the last 10 years. And when he's talking about 401k analogy, those are used to meet a future liability. You have assets that you're going to use for future spending. He's talking about reserve fund for the state to hold. For the federal government, they don't have a positive net worth. They have $36 trillion of debt. If they get extra money, instead of buying Bitcoin, go pay down the debt.
Okay. We know how you feel, David.
I'm holding back right now.
I knew you were. Okay. That's right. You're sitting next to me, I can tell. But, David, stay there. You've got another half hour. Apple says that some AI Siri features may be delayed, and the stock's down 2.6%. What's the problem?
Great question. They just are delay after delay when it comes to AI.
David, you'd love to see Apple pay some more out in dividends to its shareholders, wouldn't you?
I sure would, and so would their shareholders. They obviously have the free cash flow to do it, so I really wish they would, but they've fought this for a long time now.
Do you think it would make much of a difference to the stock if they did say, yeah, we're going to shove some more out to the shareholders?
Absolutely.
They would?
In a significant way.
All right, thanks. The mortgage company, Rocket, they've agreed to a buyout, to buy out the real estate brokerage, Redfin. We've got to be talking a lot of money here.
Yeah. Redfin is up 72%.
Why are you laughing, David Bahnsen? You don't think much to that, do you?
I just think we've seen it so many times where the mortgage market is so bad for so long, and then you start seeing one company buy another, and it's either usually done late in a cycle or early in a cycle. So I think it's very interesting, but I just think it's funny, the deja vu I'm feeling. I've seen this 3 different times in my 25-year professional career.
You've only been at this 25 years?
It feels a lot longer.
I had to get that in. David has brought some of his dividend picks with him. Brookfield Infrastructure.
I'm looking at a couple names today that are down, but not down because everyone's worried about tariffs. It's just been a repricing, and so I'm trying to find good value that I'm excited about for the future. Brookfield, you got a big 4.5% dividend yield. They're making all kinds of infrastructure assets that we need, lots of free cash flow. This is a great store of value.
And it pays 4.5% right now.
Right now, and growing every year.
Got it. You brought us this one before, Moelis.
Yeah.
What do they do and how much they pay?
There's an investment bank that only does advisory, so there's a lot of M&A. I still believe the Trump administration is going to be good about financial deregulation. A lot of private equity firms are needing to buy and sell this year. Moelis is one of the leading investment bankers in those types of deals. Again, about a 4.5% yield that's growing every year. They pay 100% of earnings. earnings out in dividends.
At times like this, dividend plays are very important. And
Well,
very
they're
attractive,
up
actually.
about 5% on the year, the dividend portfolio, and the market is now down over 5%.
David, thank you very much for being with us for the hour. Do appreciate it.